Imagine this. You have only $100 in your hand. Too many people. That amount doesn't feel like much. It could disappear quickly on fast food, online shopping, or a few nights out with friends. But what if I told you that with the right mindset and the right strategy, that same $100 could grow into $10,000 over time? Sounds impossible at first, but the truth is, building wealth always starts small. Every big investor, every millionaire, and every financially free person once began with a first investment that seemed tiny compared to what they own today. The key is not the amount of money you start with, but the strategy and consistency you bring to the process. In this video, I'm going to guide you step by step on how beginners can transform just $100 into $10,000. We'll explore simple, realistic, and smart investing strategies that work even if you have no experience. The first thing you must understand is the power of compound growth. Albert Einstein once called compound interest the eighth wonder of the world. Here's why. If you invest money and allow it to grow over time with returns being reinvested, your wealth doesn't just increase. It multiplies. $100 invested at an average return of 10% per year, when left untouched, becomes more than $250 in 10 years. At first, it seems slow, but the longer you keep investing, the faster the growth becomes. Imagine adding more money along the way, and suddenly the journey from 100 to 10,000 doesn't seem so unrealistic. Now let's look at the top strategies for turning $100 into 10,000. The first is starting with index funds or exchange-traded funds, commonly called ETFs. These are baskets of stocks that represent the entire market. Instead of gambling on one company, you're spreading your risk across hundreds of them. For example, an S&P 500 ETF includes 500 of the largest companies in America. Historically, the stock market has returned about 8 to 10% annually. That means your $100 is working for you, growing slowly but surely. The best part: you don't need to be a financial genius to start. Many platforms today allow you to begin with as little as $1. By consistently adding to your investment, even small amounts, you're building a foundation for long-term wealth. The second strategy is fractional investing. Gone are the days when you needed thousands of dollars to buy a single share of big companies like Apple, Amazon, or Tesla. Today, you can buy fractions of those shares with just a few dollars. This gives beginners the chance to own a piece of strong companies with proven growth potential. Let's say you put $20 into a fractional share of Apple. Over time, if the stock grows, so does your investment. Multiply this across several strong companies, and your portfolio starts to take shape. The third strategy is side hustles. Most people don't realize that investing doesn't only mean putting existing money into the market. It also means creating new money streams and reinvesting them. For example, you could start a small online gig, freelancing, selling digital products, or even using AI tools to create content. Every extra dollar you earn, instead of spending it, you feed it into your investments. Imagine earning an extra $200 per month from a side hustle and investing it consistently. In just a few years, that small stream can multiply into thousands. Next up is dividend investing. Some companies share their profits with shareholders in the form of dividends. When you reinvest those dividends, you're buying more shares, which means you're compounding your growth even faster. Think of it as your money giving birth to more money without you lifting a finger. Over time, dividend reinvestment can turn small amounts into significant wealth. Now let's talk about high-yield savings and bonds. While these may not make you rich quickly, they provide stability. If you're starting with just $100, it's important to build both growth and security. A portion of your money can go into low-risk investments that give you predictable returns, while the rest goes into growth assets like stocks or ETFs. This balance helps protect you from losing everything during market dips. Another approach is dollar-cost averaging. Instead of worrying about time in the market, you invest a fixed amount consistently, regardless of whether the market is high or low. Over time, this evens out your cost and reduces risk. For example, imagine investing $50 every month into an index fund. Sometimes you'll buy at higher prices, sometimes at lower, but in the long run, you're building steady growth. Many wealthy investors swear by this method because it removes the emotion and guesswork. Before we continue, let me ask you a question. What kind of investor are you? Are you someone who likes to dive deep into research before making a move? Or do you prefer a more relaxed approach? Whatever your style, there's a perfect investment strategy out there for you. To find out more, click the link provided and take the quiz. It's quick, fun, and will match you with the ideal investment approach based on your personality. Now let's talk about the psychology behind turning 100 into 10,000. Many beginners fail not because they don't invest, but because they give up too soon. They want fast results, and when they don't see immediate wealth, they quit. The truth is, investing is a long game. Patience and consistency are your greatest tools. If you stay disciplined, keep learning, and avoid panic selling when markets drop, your small investments will grow far beyond your expectations. We also need to discuss avoiding financial traps. High-interest debt, like credit card balances, can destroy your progress. Imagine earning 8% return in the stock market while paying 20% interest on debt. You're losing more than you're gaining. So, before aggressively investing, make sure you manage and reduce bad debt. This clears the way for your money to grow freely. Another trap is chasing get-rich-quick schemes. Social media is full of hype about overnight success. But in reality, most of these promises are scams or risky gambles. True wealth is built through steady, smart strategies. If something sounds too good to be true, it probably is. Stick to proven methods that compound over time. Next, let's look at some additional options. Real estate is another possibility. While $100 can't buy a house, today's technology allows you to invest in fractional real estate through platforms that let you own small parts of properties. This gives beginners exposure to rental income and property growth without needing thousands up front. Finally, let's talk about cryptocurrency. This is a newer asset class that can offer high returns, but it also comes with high risk. A small portion of your investment, maybe 5 to 10%, could be placed in established cryptocurrencies like Bitcoin or Ethereum. They are volatile, meaning prices swing dramatically. But over the long term, many investors have seen large gains. The key is to treat crypto as a small side bet, not the main plan. Now, let's put it all together. Suppose you start with $100 in an ETF. You commit to adding just $50 a month. That's $600 a year. Over 10 years, you've invested $6,100. With an average 10% return, your total would be over $10,000. And that's without even counting any extra side hustle, money, or dividends. But our journey doesn't end there. To accelerate your wealth-building journey, consider these 2 final steps. First, skills-based investing. For beginners, the best investment is often not in stocks, but in yourself. Spend some of that $100 on books, courses, or skills that allow you to earn more money. For example, learning about digital marketing, coding, or AI tools could bring in side income far beyond what the stock market gives in the short term. The extra income then fuels your actual financial investments. In other words, your brain is the greatest asset you can invest in. Second, diversification. Don't put all your eggs in one basket. Spread your investments across different asset classes like stocks, ETFs, real estate, and even a small portion in crypto. This way, if one market takes a hit, your overall portfolio stays protected. Now, let's address the elephant in the room. Can you really grow $100 into $10,000? The short answer is yes. The longer, more nuanced answer is that it depends on your approach, consistency, and a bit of luck. But let me be clear, growing such a small amount requires patience, smart choices, and a long-term perspective. It's not about getting rich quickly, but about laying the groundwork for future wealth. And remember, if you stay consistent and keep learning, you can build on this initial foundation. The goal is to make this first $100 just the beginning of your wealth-building journey. As we near the end, let's emphasize the habits you need. First, consistency. Regularly invest, no matter what. Second, patience. Don't expect instant results. Third, education. Always keep learning about new opportunities and strategies. And finally, Discipline. Avoid emotional decisions when markets rise or fall. These habits will carry you from 100 to 10,000 and beyond. The journey is not about the numbers, but about the mindset. A person who can grow 100 into 10,000 has mastered the habits of saving, investing, and patience. And once you can do it with 100, you can repeat the same process with larger amounts. That's how true wealth is built. So,